Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up discussion today. We've got the US Executive Director of Digital Assets, Bo Hines, saying they're considering a multitude of ways to accumulate more Bitcoin, including tariffs. We've got Kraken announcing US stock and ETF trading for select US states, and we've got Visa joining Paxos, Robinhood, stablecoin consortium, which includes Kraken, Galaxy Digital, and Anchorage Digital. So a lot of stablecoins business being done. We'll dive into all of those, as well as spending a little bit longer today talking about what opportunities we see as the market is kind of settling down after all of the Trump tariff shenanigans. So stay tuned for that. I've got Legendary in the co-host seat with me today. We are delighted and almost ready to get into it. But just a reminder, friends, before we do, nothing that we do or say here is financial advice. This market is super risky and we don't know anything for sure. So please proceed with caution, exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It is the 15th of April. How are you doing? How are you feeling?
I'm quite excited for the show today. We have some more bullish, straightforward news than we've had over the last couple of weeks, maybe even over the last 1 or 2 months. So that's something good to get into. Apart from that, still very much nerding into more and more AI tools. Someone has been publishing the update on Kling, which is that video generating AI model. And I want to dive more into that. I feel like I've gotten pretty good at combining using Midjourney as well as OpenAI's image generation model and playing with the two of them to have some more consistent images and storyboards. But whenever I play with generating a video, the outcome is still a catastrophe. And I definitely want to level up there because the tooling has gotten so much better. And I feel like this is going to be fun to play with.
Okay. That is pretty interesting for sure. What do you mean by we've got more straightforward news today? Why don't you unpick that for our listeners?
Well, we're going to dive into how the US is actually planning to buy Bitcoin. And there's no 6D chess model that needs to be unraveled to be like, oh, if this happens and the yield is going to move this way, then Trump is going to do that, anticipating this. And that then might lead to a pump in BTC. Nope, today it's pretty straightforward. It's like these are 2 to 3 ways how the US is looking at buying BTC, which could become a reality.
Yes. So that's kind of interesting for sure. We'll touch on that later. And then I thought more broadly what you meant was potentially that it's the first day in quite a lot of days where I don't think I may be wrong because I may look through the announcements. There was probably some announcements yesterday, nevertheless, but it was the first day where markets like weren't in a reacting aggressively to some tweets being shared by either Trump or the presidential team. Obviously, on Sunday, we had a bunch coming out where they were saying, look, these tariffs that you thought were going to be exempt, we are going to bring them back. But the market for the first time was like, you know what? We're just not really going to move now. There's been all this uncertainty. We're at a level that we are happy to sit at. And we frankly we don't, maybe it's saying like we don't trust the administration with anything that you're saying now, so we're not going to go down if you're trying to push us down to the extent that that was of the options in play. So we've kind of just hovering around now, and in the last 24 hours it's been a bit more peaceful again. The majors are flat, which we'll talk about in a second, and maybe in a bigger way we'll talk about some of the opportunities we're looking at as a consequence of now things settling down. Obviously, certain things could still escalate, but definitely want to start looking forward into the opportunities that we see in the market now that some of the PTSD from the crash and maybe even some of the initial horror and shock of the tariff stuff has been digested now, and people have had a chance to process all of that. The question is, what are we looking at? How are we seeing things moving forward? So that's what we want to talk about today, as well as touch on the headlines as usual. Any final reflections there, Ledge, before I get into it?
Yeah, it's been a while also since we had one of those portfolio and opportunity chats on the show, right? I feel like we might have been taking a break from, call it, the day trading side of things. And also a lot has changed to my own portfolio strategy. So quite excited to hear how you've been thinking about that lately, because typically we did take the time off the show to talk about that, maybe like once every 2 weeks or so. But recently we've been so busy with some cool things that we're working around the show, especially also the community aspect, the Discord aspect on it, that we haven't had that portfolio chat in a while. So it's going to be news for me to hear from your side as well.
Yeah, looking forward to that. Going to surprise you with some of my. I'm definitely going to surprise you with one of my DCAs that I've set up. So excited to share that with you in a minute. But yes, as you said, we're working super hard on this Discord side of things. There's a bunch of stuff we want to do in order to make a community relevant. Like, we don't want to just create a group where like-minded people kind of come together just to chat. It's like, yeah, fine, but we want to provide some instructive content that is helpful. And we've actually done this before a couple of years ago, where we had like a bunch of links going off to protocols that we liked and that we're playing around with. So we want to embed that into the show and then have a place where people can go and chat about those specific opportunities. So that'll be the way we want to design that. But we'll have more details on that. There's no FOMO. There's no urgency around that. We'll let you guys know when there's something to be done. Just commenting on Swizzy's comment in the YouTube comments, that my DCA to surprise you guys with is yesterday's scam ohm. Down 90%. It could be a good time to buy, but just because you're down 90% doesn't mean it can't go down another 90% when the team owns all the tokens. So that is not the one that I am a part of. I will reveal it a little bit later, but before we do that, let's get into the main price action. As usual, starting with the majors, we've got Bitcoin pretty much flat at 85.6K. We've got ETH. I'm going to have to double click this to check, because why is ETH down 3% on a day when everything else is flat? Okay, ETH is down 3% then at 1.6K. XRP is flat at 215. BNB is flat at $588. Solana is also flat at $132. Getting into the meme coin side of things, we have Dogecoin is down 3% to 15 cents. We've got Pepe down 4%. Trump's down 6%. Bonk is down a couple of percent. Fartcoin is up 4%. Maybe that's because I started my DCA into Fartcoin. SPX is down 5%. WIF is down 7%. Pengu is down 6%. Brett on the base side of things is actually up 3%. So a bit of a red day in general on the meme coin side of things. Trying to see if there's anything else worth noting there. Anime coin. This was a big mover, actually. We're up 24% for some particular reason. I don't know if Ledge, you've got any insight there on what's going on in the Azuki/anime ecosystem?
Nope. To be honest, I have missed that completely.
Okay, fair enough. Sometimes coins go up 25% and we don't know why. That's okay. Just pointing it out for people. So getting into the headlines themselves, you had the US Executive Director of Digital Assets, Bo Hines, yesterday saying they're considering a multitude of ways to accumulate more Bitcoin, including tariffs. Just want to, we'll dive into how that was explained. I don't know if it was a concrete, definitive answer at all, but we'll just share the information there. We've got Kraken announcing US stock and ETF trading for select US states. That's pretty big news. I think this ability to switch much easier between crypto and stocks and ETFs is pretty interesting. And then finally, Visa joining the Paxos Robinhood stablecoin consortium, trying to tackle this stablecoin business and provide some competition to Tether and Circle. Some notable price action. We had RWA L1 Mantra dropping another 13% today. That's the one, the OM token, which dropped 80% yesterday, with a lot of people kind of making the accusation that this was, just not, everything was not above board there. There was a lot of either team selling or market maker selling or investor selling, not entirely sure. Story Protocol's IP token actually swung down 20% yesterday before recovering immediately back to 4 billion FDV. When I tweeted about it this morning, I think a lot of people were suspecting similar games taking place, market maker games taking place. It makes it impossible. And I'll come back to this in a second, but God, although you might desperately want to short this stuff, good luck if it's going to bounce back 20% immediately or have these pumps in the chart as well. Incredibly risky. That's on the price action side. Legendary, is there anything on the NFT side that we need to be aware of?
Yeah, before I move over to the NFT side, maybe just one additional comment on the market making situation. There's been a pretty good post trying to explain what went on with OM. Now, I wasn't able, obviously, because none of that information is public, to verify if this is 100% accurate or not, but I think it's more about the model to understand that this is a model how market makers operate and that this exists. So I cannot make the claim to the veracity of that being for Ohm specifically, but the model for sure exists. And it is the model that I think we briefly touched on one of the shows with Adam from Proof of Play, where basically the team is not paying the market maker a monthly retainer, but is finding a different way to compensate them. And one of which is a loan option model, which basically means you have a contract with a market maker. And once that expires, the market maker can basically have a put option on your token with a specific strike price and then can sell them off. And that post, which was explaining and was claiming to have some of the details on how Ohm has been market made, said exactly that this was the contractual situation there. There's been a loan option model market maker contract, which did expire. And on that expiry date, basically they hit the strike price and did sell off the tokens on the one hand, and on the other hand, added to that investors who most likely, or some of the investors would be aware of how the market making situation is shaped. Also, we're moving the funds to Texas, which we touched on yesterday, and selling off the token as well. I think that also might be some helpful information that even if you're an investor in a company and you sometimes ask about the specifics of the market maker, which is something that I often, or I actually always do, half the time I don't get an answer to that. So I'm like, who's your market? Even the most general question, which market maker are you working with? Half the teams are not willing to give you this answer. So it's then on you to decide if you even want to invest or not. But I'm just saying that teams, not even to the investors, but not even to all of the investors, have sometimes lack this transparency to share what is going on in the background.
Yeah, look, that's a really good point. It's an incredibly opaque aspect of the industry, and this is a real blight on the industry, to be honest. We've been saying this on the show a few times. Sure, you can speculate on these tokens, but we're really doing it blindly if you don't have some indication as to what's going on behind the scenes. This we kind of shared on the show weeks ago, actually, during the mania, that there were these OTC deals going around. I think Kobe spoke to it as well, where you're getting offered a huge discount, but the terms are much less. And this was quite nicely expressed in this tweet. I'm just going to share my screen here, Legendary. This tweet, remember, we're live on video as well. If you want to watch in, we're on YouTube and X video as well. From Simon, I think this is the CEO at Moonrock Capital. He said something I've been noticing more and more lately, and which surprisingly isn't really public knowledge yet, so I thought I'd share it here. Been getting offered quite a few OTC deals with massive discounts and relatively short vesting periods. So these projects offering OTC deals always seem to be performing incredibly well on the charts, which makes the discount look like an obvious no-brainer. Because this is the question you're going to ask yourself, right? And this is the question we asked ourselves, Legendary, sometimes, where it's like, what could possibly go wrong? You're getting offered an 80% discount, 6 months vesting. If you go in and buy the tokens now, what can go wrong? The price is up here. Why would you not buy it if you're getting such a significant discount? And I guess the answer is, according to Simon, or his take is, these pumps are often artificially sustained by market makers rather than driving by genuine demand for the token. Once the OTC round is closed, the token starts to dump. OTC investors get wrecked, and retail, misled by the inflated price action, gets wrecked even harder. So the moral of the story in this case, the market is filled with more smoke and mirrors than you'd like to believe. Be cautious and always do your DD. Better one check too many than one too few. So it sounds like some of these the OTC side of things basically is also an additional layer of complications beyond just the market making stuff that you just mentioned. So that's just one additional layer to add in. Ledge, any reflections there before you go into the NFT stuff?
Yeah, I think that's an important point, especially if you're ever offered OTC deals. Like, just think of, why is the seller offering you this deal? Like, if I buy a car for 50 grand and the next day or a month later, I'm trying to sell it to you for 20K, you might be wondering, what is wrong with the car? Or am I like really that hungry for cash? Do I have like some sort of emergency going on? And if you see a well-funded protocol, which definitely does not have immediate need for cash and is offering you 60, 70, 80% off on a 6-month vesting, then it's basically expressing that the seller thinks this is a good deal for them as the seller. So they think that the price is going to be down more than those 80%. And then that's really the question why you would buy in this situation. So I think this principle of like, if a deal seems too good to be true, then question that a lot, question that hard. Of course, it applies for OTC deals as well. And I think we've been doing that. Like, we've been offered quite a few OTC deals, both like personally as well as part of for the show. And some of them are very interesting, and some of them I think we pursued, and others were like, wait a minute, this is very weird. This does not check out.
I think you can correct me if I'm wrong. We need to, we've done a lot of deals in general in the last year or so, but I'm pretty sure we've said no to every single OTC. We've obviously done
personally, or both.
both.
I think we did.
I don't think I've done personally. I don't think I've done OTC. I think maybe you have on a personal level, but definitely for the show. Two reasons why we said no. One, I think the numbers just didn't check out. So because of those things that you just described. And second, I think it's an incredibly risky thing to do with like a corporate treasury, to take directional bets on an already opaque ecosystem. That's something I personally, with my modern market hat on, want to keep out of the company to risk manage the company. If I want to take that risk on my name, then that's okay. But I think that's the reason why I'd want to keep it out. So the OTC stuff from a company perspective, I think never really worked, but maybe you can speak to that more from a personal perspective.
Yeah, no, that's sometimes with the amount of deals that we do, hard to remember what was done in a company, what was done personally. One OTC deal, let's put that, only one of the like 3 or 4 that I did worked out pretty well. The others were like trash, to be honest.
Really?
But the one that worked out pretty well worked out so well that it did compensate for the others.
Okay, that's interesting. Yeah, that's interesting to know. And look, by the way, we obviously talk about this stuff as being incredibly risky, which we say at the top of the show too. Sometimes you got to participate to know what it feels like, to get a sense of how they work in practice. It doesn't mean that you say no to everything. It might be the case that as part of your portfolio of risk-taking strategies, you have a proportion that is dedicated to this type of risk. So just because something's risky doesn't mean it's a no. It means that you might have a proportion of your allocation which is like attached to that type of thing. Personally, I haven't really liked the look of any of them for the reasons already described, to be honest. So, and that's even from a personal perspective. I much prefer angel style stuff, getting in from the beginning, or just the usual stuff. In fact, I kind of like allocating lazy capital as well, right, via airdrop farming. But we'll talk actually more specifically on those things in a second. Ledge, anything else before we get into the NFT side?
Yes, just a very brief look at the NFT side. There we go. In terms of the majors, not a lot of movement. The only thing I really want to point out is the Final Bozo collection, which had its public mint yesterday, and that is the premier or the most hyped NFT collection on Abstract. And the private mint, the whitelisted mint, was quite a while ago. The public one was yesterday, minted for around half the floor price that it's sitting at. It's sitting at 0.18 ETH. Has also seen more than 200 ETH of volume over the last 24 hours. So definitely a strong side. A collection is still pre-reveal for the anime-styled PFPs, but definitely a strong sign to see that this was the most anticipated collection on Abstract after all, and it's doing pre-reveal decently well. It's up roughly 100% for minters, and it has seen at least a couple hundred ETH in volume.
Nice. Good update there. That's interesting to see. Just a few other bits from around the space. We had Canada announcing they're ready to launch Spot Solana ETF this week. Got Strategy announcing their first buy again of Bitcoin. Not their first buy at all. Their first buy in a while. 3,459 Bitcoin purchased for 285 mil at an average price of 82K. Did not buy the dip at 75. Waited for it to get back to 82. So Sailor is back at it again. Kernel DAO restaking protocol launches kernel yesterday, settled around 320 million FDV that is a restaking, one of the restaking protocols. NVIDIA announced $500 billion investment plan to expand AI infra into the US. That's obviously a um, big objective for the the United States administration at the moment. Yeet, the new crypto casino backed by Dragonfly, announced $20 million of volume since launch. That's pretty impressive for crypto's casino. And finally, Coinbase becomes official crypto partner of the WNBA. That is the Web3 Roundup to get up to with everything else happening in the space. Legendary, before we get into the main headlines today, because there's some decent headlines, but maybe there's less meat on them as they might be usually. I wonder whether we spend a bit of time here talking about the opportunities that we're seeing and how we are moving in the market at the moment. Now that had a bit of time, to digest since the mania from January, February, where it's been a couple of months, things are settling down. The downside seems to be protected, at least a little bit, based on where we've come from. And then in addition to that, tariffs seem to be being digested now. That downside seems to be capped compared to what it was when all the markets, including the S&P, were at their highs. So how are you moving here? What are you, maybe let's go first. Why have you been, we were talking off the show, why have you been out of the market, kind of not doing anything? And why are you starting to think this is a good time? And what are you looking at?
Yeah, absolutely. So maybe just to recap from the start of the year, I did move the majority of my net worth into stables. And followed by that, what I also did is once the tariff situation started to become a bit more aggressive, let's call it like that, because I'm euro-based, just started to shift my stables into euro-based stables because I didn't want to have that FX risk attached to something that is supposed to be a stable portfolio. But what has been changing for me is maybe let's touch on the stock side first, because that's the quick one to explain. So typically, if you look at something like a world index fund or the S&P 500, you will note that over multi-decade average, it returns around 9.5% per year. And with this administration, we've seen days where the stock market was down 10% in a day. It was up 10% the next day. So I'm like thinking, when something dumps around a yearly performance or half a yearly performance in a day, I'm very much willing to use those days to DCA more into stocks either way. I do have a savings plan that's going on, monthly savings plan, but I do like those very red days to accumulate, but that is with a very, very strong long-term vision. Now, what has changed for me on the crypto side is that last year I've been mostly focused on trading AI and memes with a very high upside and maybe with like little capital investment, where you can trade with a couple hundred, with a couple $1,000 and like quote unquote reasonably expect a very significant upside if you're early to some of the tokens. And I feel like, yes, we had some like pockets of opportunity, like Bitcoin on abstract, that are slowly coming back. But to me, the more interesting thing now has been, and it's something that I honestly also need to get more comfortable with, to have bigger, very short-term trades with a lower relative return. So to give a very precise example, I mentioned it on the show because I've seen it, I saw it on the timeline myself when Lito pointed it out, that you had the Coinbase stock, the tokenized one, there was a price discrepancy of like $6-7 from the on-chain price of the stock to the quote unquote like real price, the off-chain price of the stock. I was like, okay, I'm gonna buy 200 Coinbase stocks, and if this works out, basically that's what is it, like around 30K, and then you have $6-7 to make per contract per stock. That's like 1.4 1.5K. It's a 5% gain, but it starts to accumulate obviously if you do that with multiple opportunities like that. So this is something that I didn't really do before, because I was like, I don't want to move a lot of capital for a relatively small return in a market where I can also use little capital to hope for an outrageous 10, 50, 100x, whatever. And now that I am quite happy with my stablecoins stack, where a part of it is just reserved for doing nothing and waiting to buy a bigger dip or DCAing into Bitcoin, which is something that I also do. And another part is reserved for like those quote unquote like short-term trading opportunities where like I identify a very specific situation where I think there is maybe a mispricing, an arbitrage, or just a short-term trade opportunity going on, and I use that. What I'm not really comfortable with right now is to pick out a bet and say, I think, I don't know, ARC, the AI token, recently saw OG Pharma talk about that again. It's down from, I don't know, God knows, 300, 400, 500 mil, wherever that traded at, to 30-ish mil. He's like, basically this price now is so close to zero. It's down 90%. So and the team is still shipping and producing and doing stuff, so you can buy that. But obviously it could go down further. And that's a bet or a risk that I'm not just quite yet comfortable to take, to be honest. I think there's like still too much volatility, too much fear in the market, and things still could go sideways. But on the other hand, I also realized that, well, I haven't been trading in a while and I do want to do things. So this is where I started to look at a different style of trades. And then, real quick, the other thing that is still ongoing is the, as you call it, the lazy capital, the airdrop farming, where that's some funds or a lot of funds that are deployed on Sonic to farm some of the stable yield plus Sonic airdrop there, or also as part of the Roundup today, the Yeet casino that you had mentioned, where I typically done pretty well with farming casinos like Shuffle and or farming YOLO games on Blast, and kind of realizing where you have low variance games to play, where it might make sense to take a loss from a casino if you think the airdrop is going to overcompensate for that. So those are the things I've basically never stopped doing, because I feel like airdrop farming works in almost every market phase. But for the active part of the portfolio, the trading style definitely has changed for the moment.
Okay, that is super interesting. I'll share some of the things that I'm doing in a second. Wanted to double click on the, if people want to look at the stock opportunity. You mentioned one particular stock that is that was mispriced. How do people access that to check whether the stocks on chain are mispriced compared to the normal stock price? How do people go about getting into that universe? Obviously, Kraken has announced that they are going live with stock trading in certain US states. So that's one of the headlines, but this is obviously some other opportunity. So do you want to just explain that?
Yep. Very good question. So for the off-chain stock price, just Google the stock, go to Yahoo Finance and be like, or Google Coinbase stock price, and you will see the current price. Just keep in mind if the market is currently trading or not, right? If I look in my morning for the Coinbase stock, the market is closed. What I can see is a pre-market price. So be aware of whether the stock is currently trading or the stock market is currently closed. And then for the specific tokenized stock, the best way to go about that is not, in my opinion, to go to CoinMarketCap or to CoinGecko, because that just gives you a current view of the price, but it doesn't give you a good handle on the amount of liquidity. So best go to Bungie, go to another swap where you look for that specific token and already try to preview how a trade would affect slippage. So say there is a $20 discrepancy between a stock that you like on chain and off chain, but the liquidity is so low that with a 3K buy, you move the price, then it's probably not worth doing that. So you do want to be aware of how much liquidity there is. And I say that specifically because this tokenized stock category is rather recent, rather new, and there's not much liquidity going on. So maybe with the Coinbase stock, I think you can reasonably buy 50K, maybe 70K, but I think last time I checked, the total liquidity for that on base was like gonna go just 700K to a mil. So and that's for the biggest there. There's like some smaller stocks where you have maybe mid 5-figure liquidity in there, and then it's not worth doing that. So basically, just if you don't want to do some LP math and look at that, go to the DEX of your choice or aggregate of your choice, type in like one Coinbase stock, how many dollars would that cost? Type in a 10 or 100, and you will see how much that price changes, if it changes, and you don't want it to change because you want liquidity to be deep enough that your trade is not moving the price too much.
Interesting stuff. Okay, so that's super helpful. That's one that was definitely not on my radar. Glad we were able to surface that as something to keep an eye out. As you said, you've started to also maybe um, look at some other, well, airdrop farming kind of goes on. You mentioned Sonic. I know you've been doing that for a long time. I've got a little bit there too. Um, the thing that I've been looking at most, though, if I'm being honest with everyone, is Hyperliquid. I think I've maybe started clipping back into crypto for a little bit longer than you, Legendary. I've been saying for a while. Look, Hype at $12 is better than 30. Hype at $13 is better than 30. So, if you like hype, then clip into hype. So I did that a little bit. I've been buying a bit of hype from maybe 12 and 13. I even bought a bit at the top when it went up to 17, and it went down to 13 again, bought some more. So just been like accumulating hype because I think Hyperliquid is going to be good. Now, the reason why though is not just a one dimensional move to accumulate hype, which I still think is a good thing in my opinion. And the reason why that is good is because it's it's increasing its market share of this kind of spot activity. So it's doing really, really well there. It's absolutely printing money. I think Hyperliquid made more money than every other chain the other day in the 124-hour period. It's like right at the top. The tokenomics are beautiful. Like if you just reflect on why we struggle with so many other tokens at the moment, it's because there's this, well, at least one of the reasons is this humongous overhang of VCs who will rightly get their tokens after their initial investment and then want to sell for a profit. Hype doesn't have that because they've inverted the model. It was self-funded. They are buying back the tokens all the time rather than needing to sell them. So there's just a very nice, it's very nicely set up for whatever they're planning to go in the future. So you have this killer perps product where you're trading and which is making tons of money. And then now you've got the Hyper EVM, right? Which is the chain aspect. And there's all kinds of people building out there. So this is the 2-for-1 deal. I like always trying to allocate for 2-for-1s and ideally being super lazy. And so I can explain some of the ways I'm being lazy with that as well. So you gotta buy some of the hype. I think that's one of the thing. That's what I've been doing. And then now your opportunity is to do the lazy stuff, which is the airdrop farming, and go and support various protocols that you think will be good on the Hyper EVM. So you have to take your hype, you've got to bridge off into the Hyper EVM. And then you've got to look for the protocols that are going to be the well-known protocols that you're familiar with. For example, there will be a Uniswap of hype. There will be a Jito of hype. There will be a Aave of hype. For example, Uniswap. What's the Uniswap of hype? Well, there's a variety of dexes at the moment. I'm not going to, I don't think I can list all of them, but you've got Kitten Swap, you've got Hyperfi, you've got Hyperswap. Those are just three. What's the Aave of hype? Well, you've got Hyperlend. And it's got a cap at the moment, so there's no way to get in, but you've got to stay alive for when they announce that the cap is increased and you can deposit some hype in there. You can start earning some points. What is the staking option for hype? Well, you've got Kinetic coming up. They haven't launched yet, but I think that will be pretty important. What's the stablecoin on hype? Well, Felix protocol is the one where you can deposit some hype, borrow against that hype in order to get some Felix FEUSD, and you're borrowing, so you want to make sure you're not doing a loan to value ratio that's too high. You don't want to get liquidated, so you want to keep that low level. That cap is also filled, but for the people who've got in, like myself a couple of days ago, you start earning your points then. It's like these are some concrete things that you can go and do with your hype. And remember, one of the reasons why I loved holding ETH for a long period of time was because I always used to say, look, you can say whatever you want about it, but it's so useful. It's so useful to go off and do things. And right now, in my opinion, hype is good anyway. Like even if hype didn't have all this other stuff, I think it's quite a good token just because of the way it makes so much money on its core product. But the fact that it's got all of this other stuff to do, and there's just a lot going on, and hype is at the center of all of it, then that makes it quite a compelling argument for me. So that is my my general thesis for hype. There's probably some more points as well, but I'll stop there, Ledge, for any thoughts, reflections, questions from you.
Yeah, I like that ecosystem play. I think we've been doing that with some other L2s. We've been doing it years back with Arbitrum when we still had the airdrop season product. We farmed Blast to a similar extent, and that's something that makes a lot of sense. Like if you invest in the token of an L2, if you invest your time in there, then also look at the protocols there that potentially will have an airdrop themselves and try to chain multiple opportunities together. On that note, JD in the YouTube comments has a question for you. JD is saying, for Hype, do you think the friction of getting funds over there will be simplified, or do you think it's even an issue?
This is a good question. Someone else asked me this question yesterday, and I think I have a good answer for it. It's about value. I think, in my opinion, I don't know if I can give you a concrete example of how this plays out, but in my opinion, value does not accrue necessarily just because there are masses of people. And I think a lot of people will look at something like Hype and say, well, a lot of, the masses are not going to go and use Hyperliquid. My response to that would be like, okay, that's completely fine. The masses aren't using half of crypto already. We still got like billion-dollar protocols left, right, and center. So it doesn't matter, in my opinion, that every single person in crypto isn't going to use it, or that loads of other, that it's not like normie friendly. I personally don't think that matters. What matters is how much value it accrues, and not necessarily TVL, but just like how much economic activity is it able to attract? How much real lending is going to go and take place there? How much real volume is going to take place there? What you've seen from Hyperliquid is that allegedly there's only, I need to double check this, but I'm pretty sure the number going around yesterday is that there's only 100,000 holders of the token. I think that is correct. We need to double check. So that's not a lot for these types of ecosystems, but it's already incredibly valuable. So my point being, you don't need loads and loads of people to make something valuable. There just needs to be sufficient economic activity for the people who are there to think this is super valuable. So that is my take on that. I'm pretty convinced that if all of crypto Twitter, who are, in charge of creating the next narrative and are just waiting to see what other people, where to follow the people next, if none of them come to Hype, it doesn't matter because it's already being done. Hyperliquid as a perps product is already crushing it. So I think that's my kind of thought there. And as Kusho just said, the friction is your friend. Friction is an opportunity in this space typically, and I would go along with that. So I would just pair whatever I just said with that outlook. Other people are lazy, guys, so you can take advantage. If you are intrigued by Hype and you have a question and you're not sure what to do, I obviously mentioned a bunch of things. I'm going to be sharing more about that soon, but I'm happy for someone to DM me and ask any questions. I'll be happy to answer any questions on it at the moment, as to kind of get people set up. We have no deal or whatever with anything Hyperliquid related, but we're going to be trying to produce more educational content with this kind of stuff. So happy to answer anything separately if that would be helpful. Ledge, any final reflections here? What are your thoughts?
Yeah, I think one of the key points I want to double down on real quick is what you said about the holder base. You don't need a lot of holders if there's economic activity, if there's like a group, a community that is engaged with whatever the product, the token, the protocol is, to be able to trade that in a profitable way. You said Hype has 100,000 holders. Just to put that into perspective, the thing that I mentioned before with the backed FI Coinbase stock. So if you look at BaseCan, at the wrapped backed Coinbase token, how many holders do you think does this Coinbase stock have that I traded on Base specifically? It exists on multiple chains, but we're just looking at Base for the moment.
I don't know. Yeah, I have no idea. It's never
Just
a metric. A few
400.
thousand?
400.
400?
Not even 1,000 people trading this thing. So as you say, there's like pockets of opportunities, even if a couple hundred people are trading or looking into something.
Yeah. God, this space is so good, guys. Like seriously, if you just reflect for a second, I know that we've gone through like a fairly traumatic period of meme coins and extraction, and arguably some of that stuff is still going on with some of the coins that are coming to launch. But you just can't get disheartened from the perspective of the relative type of opportunity that you can get accustomed to here if you just keep active and keep curious. And for the people who are thinking, oh, this is another ecosystem I have to launch, and when I just rattled off those names of new protocols, yeah, sometimes it's a bit of a pain. You got to run back the same playbook that you've done another time before. But that's part of the game. It's part of the game to go and keep exploring, and just stay curious. So those are some of the things that we are seeing. Ledge, I wonder whether, I don't know, we've only got 10 minutes left. Are there any other opportunities that you are seeing and that are interested in at the moment?
I think maybe let's connect it to the Sonic side of things, because I've been speaking to that but haven't given any details.
Sure.
So on Sonic, you have the situation that this is a chain where there's a heavy DeFi focus, where there's a lot of yield-oriented protocols popping up, and some of them already have been hacked. Some of them had absurd yields going on. I don't even remember the name of one that had, for a brief moment in time, 3,000% return on stablecoins. And you can play around with them, and you can play around with the DeFi games, or the DeFi Ponzi's. But the cool thing is that you had Aave specifically also moving to Sonic and being available there, where you can just do your typical stablecoin lending, or lend whatever collateral you want to lend. You have some of the more prominent DeFi protocols existing there. And this is what I liked about it. I did play around with some of the more degen things, but ultimately I was very happy to just take a larger chunk of my stable holdings, put that into Aave, because I just think Aave has worked for years. Obviously, there's still smart contract risk involved, and things could go south either way. And have that stablecoin a portion parked on Aave on the one hand, and then also use a part of that on Pendle. And I think Pendlefy is like still one of the more interesting DeFi primitives. I don't think we have the time to dive into how that works exactly, but just maybe a quick primer on that. Basically, Pendlefy is working on making parts of DeFi liquid, or creating markets for things that didn't exist. And it creates a market for people who want to have yield, and versus people who want to farm whatever points, whether that's Sonic points for the airdrop or any other protocols. And it provides you with different options to say, no, I'm happy to take a fixed yield for whatever token, whatever liquidity pool I'm farming, versus no, I'm happy to forego some or even all of that yield, but in return receive a higher multiplier on whatever point system I'm currently farming. And that sometimes also has like incentivized liquidity pools, or incentivized pools between those fixed yields and those like point focused pools that allow you to boost the yield even further. And I think when Aave has extended its caps for stablecoins on Sonic for the first time, for a good while you could actually farm around like 17 or 18% yield on your stablecoins. I think that is down a bit now, but I honestly have been thinking that lazy capital portion that you like so much is a rather small portion of my like total capital. There's more active farming involved for me. And at one point I did shift on Sonic from like experimenting less with the more degen protocols and just focusing on getting a nice DeFi yield out of the Aave plus Pendlefy combination, and just see where that will go airdrop wise.
Okay. That is very helpful. Good breakdown. I think you're correct to say, yeah, I think you prefer to be slightly more active than me in that respect. But it's also fair to say we've both done pretty well from that side of things. Just on the slightly more active side, by the way, two more things that we're looking at. Maybe this is just turning into a show where we talk purely opportunities, because we haven't done that for quite some time. You mentioned the casino, Yeet, right?
Yeah.
So that's backed by Dragonfly. So okay, starting off, it is backed it is created by Mando and KBM, two very prominent traders on the timeline, very well respected traders and kind of crypto participants. So that's like pretty strong. They've got a bunch of really prominent people pushing it too. The product seems to be working really well. They've done $20 million of volume in the first few days, which is pretty impressive. And they've got this very multi-tiered incentive system to encourage referrals. As you said, Ledge, you went through the what is it? I keep getting these names wrong. Stake and Shuffle. Which one was the one that you did before?
Shuffle.
Shuffle. So Shuffle was the Web3 version of Stake, which is just a gambling platform, and it ended up being very profitable. Why did you think? So I'm in agreement with you here, by the way. So I think this is a valuable thing. Why do you think? What was it about Shuffle that made you think this is going to be super valuable? How did Shuffle play out for you? And then what would be the way to look at that? If you wanted to go, again, appreciate this is on the more degen side, right? It's like literally gambling in order to like drop farming by gambling. So this is on the more degen side. I'll give maybe a bit more of a traditional option just after.
Yeah, so there's two things that you want to look at when you look at a casino. The one thing is called RTP, which is the return to player. That means if I put $100 in a slot, what is the average that we'll get back from that? And with a typical online casino, you will see an RTP of 99+%. So on average, for every $100 that you put in, you will get $99 back, which means you quote unquote only lose $1. But that metric in isolation is utterly worthless because you also need to understand the volatility of that. And if you have a slot where you have an extreme volatility because it allows you to win up to say 100,000x or even 1,000,000x on a single spin, that means that out of a pool of say 1,000,000 players and 999,000 of them do a single spin and lose everything, and one player wins 999k, the RTP, the return to play on average, is still 99.9%. But the reality is that 99% of the players have lost money on that single spin, and one person took away a win of 1,000,000. And so you need to understand how high is the return to player on the one hand, but you also need to understand how high is the volatility of the specific thing you want to do gambling. And if you want to typically look at airdrop farming for casinos, you want to find a strategy that is as capital preserving as it can be, but also understand it's a losing game. So you want something that has both a high RTP, a high return to player, but also has a rather low volatility. And with Shuffle, for example, that was the Limbo game. With Limbo, you just pick a multiplier, say you pick 5x, and then you have not a 20% chance, but a 19 point something percent chance to hit that multiplier and win 5x of your capital. And you don't want to play this thing with a 5x. You want to play it with as little volatility as you can. And Shuffle did allow for 1.01x bets, where you had a 99.98% chance to basically win $1.01 on a $1 bet. And you could just queue millions and millions of bets and like kind of do the math that you will lose, say, I think it was like $1,000 on 100K roughly. No, even less than that. It was like a couple $100 on 100K of volume that you would lose. And then you need to have a strong hypothesis whether that casino specifically will also reward low volatility activities equally. And Shuffle, I think back then has been saying that or said that. They said, yep, we are looking at volume, and volume is going to be the primary driver. And they did not mention volatility as a part of the first airdrop. So I was like, okay, this is a bet that I'm willing to take, even if they change the airdrop criteria, but I can just lose a couple hundred, a couple $1,000 and get some serious 6-7 figure volume in that casino. That is a risk that I'm willing to take in return for the airdrop. So you need to read some of the hints that the protocol, the casino gives you. With Yeet, it's way too early to tell that. They do have the Limbo game, obviously, as everyone does. But there's obviously no indication yet if they will only look at volume, if there's even going to be a token, but let's assume there's going to be one, or if they're also going to look at the volatility of your bets, and they would then be more inclined to reward higher volatility bets, aka playing slots. That's some additional things that you need to keep in mind. And then specifically with the casino airdrops, and I'll mention that because I haven't seen that with any other thing, Shuffle started something that was, did they call it wager to vest or wager to unlock, something like that. So basically you could only claim like 10% of your airdrop at TGE. And for the rest, you would either have to wait a specific amount of time to vest that, but you could speed up the vesting by keeping, by just continue to gamble. And obviously the idea kind of is, you know, you continue to gamble, you lose more money, you get more tokens that you can claim, you keep gambling them, you lose them as well, because you will have people who get into this like gambling loop. So that is one of the serious risks with, you know, farming casinos, that you really, 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 and I can't stress this enough, need to be sure that you're not like prone to develop a gambling addiction, because if you're prone to that, and only, you know, everyone can answer that honestly for themselves, the likelihood is super high that you will just gamble away your airdrop. And that we see has happened with all the casino airdrops, obviously. So if you're like very analytical and you don't care about that, and you just see, okay, I'm going to produce X amount of volume, I'm ready to lose 2K, and whatever is the outcome of that for the airdrop, I'm just going to claim it and sell it. That's cool. But if you find yourself enjoying the gamble, then that's maybe a bit more risky. Let's put it like that. That's something you don't want to enjoy too much.
I think that's an excellent final point on that. Really, really good final point. Which ties into all of this stuff as well, actually, when you're allocating capital, when you're trying to get some of these additional yields via airdrops, got to be kind of calculated about it. Got to be calculated about it for sure. Want to allocate appropriately and not get too tied up or emotional about it. One final thing. So obviously that's on the more degen side of things. I wanted to give you one more concrete, interesting thing, which have found and been looking at recently. This is Unit. I'm just going to share my screen here. Legendary. Again, sticking with Hyperliquid for the moment. Unit is the decentralized asset tokenization layer for all of finance, built exclusively on Hyperliquid. What it allows is basically your ability to move ETH, spot ETH, in and out of Hyperliquid natively. So you can like take ETH from mainnet, chuck it over to Hyperliquid, and trade it on the Hyperliquid platform. And you can do the same with Bitcoin as well. So they've created a way for you to bridge your Bitcoin over from Bitcoin to Hyperliquid and then trade it. So this is a pretty big deal, because if you think about it, if you think just for 1 second, where else can you buy spot Bitcoin? Like, for all the things that you do on Solana, and yes, you've got this now Coinbase wrapped version of Bitcoin. That is how you get Bitcoin if you're on Solana, right? You've got BTC. For ETH, you've got wrapped BTC, you've got other stuff. But on Hyperliquid, however they built this out, and look, if you're a technical person, maybe you'd be able to explain some of the technicalities a bit more. I'm definitely not that person. But they've created a way for you to be able to bridge your native Bitcoin across to Hyperliquid and then bridge it back. And the reason why that is important or valuable is it has the potential to become the main place and the easiest place to trade, first and foremost, just spot Bitcoin. But then beyond that, just the main place where you can trade any majors. Because at the moment, if you want to go and get Sol, you have to like go to Solana. You can't do that on ETH in a like super native way. If you want to get Bitcoin on ETH, you got to get one of these wrapped versions, or there's definitely no way to get hold of ETH when you're on Bitcoin, I don't think. Whereas Hyperliquid is kind of creating this environment where you can just go in and out of any of these things all the time, because they're all available. So I think that's super important. And then the other thing to note is, I believe this. So this is a thread that was shared about it not so long ago too, where they said the tokenization layer behind Hyperliquid's native Bitcoin spot ETH markets are capturing 50% of the fees. And they are supposedly going to be launching their own token soon as well. And which means that that's like an incredibly profitable protocol on top of Hyperliquid. So again, this is not Hyperliquid itself. It is a team which is building on top of Hyperliquid, who have an incredible business model, because if they're taking 50% of all the fees of, let me just double check, is it the trading? Capture 50% of fees. we'd need to check that. So we need to check whether it's 50% of the fees. There's also a little bit of a fee when you bridge your Bitcoin or ETH over initially. So they're kind of taking those fees too. So that's a lot of fees. Very, very profitable business and very well positioned to be a valuable protocol. So my position would be, if you're trying to think of, if you're trying to accumulate Bitcoin over the next however much time, it would make sense. And by the way, this is the cheapest place to get Bitcoin, from what I understand. It's much cheaper than centralized exchanges. Maybe not cheaper than the wrapped versions that you can get natively on chains, but it's the cheapest way. If you're going to do that, and if you trust Hyperliquid as an ecosystem, why not do it on Hyperliquid, where this unit token is likely going to come? It's not guaranteed. It's not like 100%. That is what, just like all the usual caveats persist. But that is one of the ones that I think is very interesting as well. Something which I'm paying a lot of attention to, and which I wanted to share with everyone today. We are running out of time for today's show, Ledge. In fact, we've gone slightly over time. Final reflections on that specific point. Anything else you want to say before we close out?
Never heard about that. And this is why I actually really like it, because I think when there's an opportunity that everyone on the timeline is sharing and saying, this is going to be the best thing to do, all you need to do is connect your wallet to this and that protocol, and this is going to be a massive, massive airdrop for everyone, I think that's not the best opportunity if it's the consensus timeline trade. And that, not only is it interesting, I just heard about it for the first time from the concept of it, but because I think it's still very much under the radar, I want to still have some funds on Hyperliquid. I want to accumulate some BTC that way.
Yep. That's the point. Like, if people are trying to accumulate BTC, why not do it there while this is simultaneously going on? That's where you get like the 2-for-1 kind of deal. So I hope that was helpful. Obviously, all usual caveats apply. Do your own research. There is risk in all of this stuff. Hyperliquid is still a relatively nascent ecosystem compared with some of the more established blockchains. But those are my takes on it and why I'm positioning the way that I am. Appreciate Legendary for sharing some of his thoughts on how we are allocating. A bit of a different show today, guys. Let us know what you thought. We'll, of course, always focus on the headlines when they are important, but we're also going to be trying to, just sprinkle in a lot of these opportunities and the way we're thinking about allocating more practically over time, if that would be helpful. So thanks so much for joining us as usual. Thanks to Ledge in the co-host seat. Thank you to everyone in the Twitter space and the guys in the YouTube comments on fire as usual. Excellent questions, excellent comments. We appreciate you. Have a wonderful day. Take care. We will, of course, be back with you tomorrow. Have a wonderful day.